delighted to be invited to present to you this morning and to talk a little bit around what's happening in the future of cards and payments. I'm going to talk for about half an hour, and as Richard said in the introduction, the main thing that you probably just need to know about me is that I blog every single day, religiously, on this website, thefinancer.com. So if you want to know what's going on in Europe and in the UK, that's a good site to tell you about what's happening in banking in Europe. Or if you want to know what I thought of this conference, it's a good site to go and look at probably later this week or early next week, because I'll be writing something about my views of the Cards and Payments Asia conference. The title that I was given for the presentation is The Evolution of Payments and How Consumers Are Changing the Usage of Payments with Technology. But I thought I'd change that title very slightly to You Don't Know What's Going to Happen Because You're Often Looking the Wrong Way. It's amazing how often in horror movies, when you're looking in a mirror and you turn around, something happens in the mirror. And that's pretty much what's happening in the payments world. In that a lot of what you're going to see around the exhibits halls is not the future, it's the here and now. And I'm going to tell you a bit about what's going to happen once the here and now has moved on to the next evolution phase. If you look at the here and now, the most, I guess, revolutionary thing we saw in payments in the last decade with the internet is the creation of person-to-person payments via email and more recently via text messaging and other services through Alipay, Yandex and PayPal. PayPal is the one that I know best, only because it's the one that gets the most coverage in my part of the world. Got a bit of feedback, if you can turn the sound down a little bit. Thank you. When you look at PayPal's quarterly results, you can see why we talk about them so much, because they're growing quarter on quarter, even now phenomenally well, processing $1.7 trillion worth of payments per year and generating a good healthy revenue stream. Right now PayPal is about 2/3 of the size of Citigroup's global transaction services business in terms of revenues. So for a 12-year-old company in its 13th year this year, that's not bad going. What's been interesting is that this is not a revolution, this just sits on top of the old banking network. It sits on top of bank accounts, it sits on top of Visa and MasterCard. So it's not a revolution, it's an addition to our payments processing. What's even more interesting is that PayPal last year was processing around $12 billion worth of mobile payments, up from $4 billion in 2011. And so it's the mobile that's the real hot space, and that's what we tend to be all talking about today, mobile payments processing. Still a bit of feedback. Can you turn the sound down a little bit? I think, getting too much feedback, thank you. It's no wonder we talk about mobile as the hot space, because there's more mobile subscribers now than there are people in the world, near enough. Certainly in many districts and economies, Singapore being no exception, you see that there are more subscribers per 100 people than 100. So you've got more subscriptions going out every day, and thanks to Apple and Android, that's increasing all the time with tablet computing and with everyone now having a mobile, a tablet computer, and maybe a backup mobile, 2 or 3 subscriptions per person. Maybe you give a mobile to your pets to monitor your dog at home. You know, it's not unheard of. And equally, mobile's hot because it's moved from being just something for a telephone call to being pervasive in what we do. It's everything that we can do these days, not just making payments, but equally being entertained, getting money moved around, and it's reached into every part of the world. So mobile is disruptive because it's now connecting everybody on this planet wirelessly. In fact, the phenomenal thing about the mobile take-up is that you now can see, for example, in Indonesia, when there was recently a typhoon, food stamps being distributed via mobile text messaging. So mobile reaches every part of the world. It reaches into every part of the pockets and purses of everyone in this room and everyone globally. You now have everyone connected person to person via a technology that was not really existing in this form 5-10 years ago. And that's what's really changed things. That, for example, if you look at Africa as a continent, it had zero infrastructure for electronic payments 10 years ago. Today, it has an infrastructure that's appeared overnight wirelessly through mobile telephones. This is why we talk about mobile so much, because the figures are quite staggering in terms of where and how quickly mobile payments is taking off. And it's thanks to mobile subscriptions, mobile text messaging, mobile apps, tablet computers that we're seeing this increasing still day by day, month by month, week by week. In Africa, it took off so quickly mainly because, along with many other nations, you couldn't move money without physically giving it to somebody as cash before this technology existed. In Kenya, we all talk about M-Pesa as a great case study, but the reason why it became a great case study is that in 2006, the year before it launched, you could only move money by giving it to a taxi driver or a bus driver to physically take it to your friends or family in a remote village. And it would typically cost you 25% of that cash as a commission to that driver to move that money. Obviously, when you have something that can allow you to move money for 5% or less of the amount that you're transacting compared to 25%, it makes much more sense, which is why something like 40% of Kenya's GDP is now being transacted through text messages, text message payments. 2 out of every $5 in Kenya. What's been really interesting about M-Pesa is that it's moved the nation, and this is similar to many other emerging and developing economies, it's moving the nation into being banked. When M-Pesa was launched in 2007, there were only 2.5 million bank account holders in the country. There are now 10 million. Because once you have a history of moving money, you get a credit record. Once you have a credit record, you can be trusted to have a bank account if you have a good credit history. That's what M-Pesa and mobile payments has done for Africa and is doing for the world in terms of enabling us to have wireless payments with credit histories for people who were previously underbanked or unbanked. But when we look at the more developed economies, we look at here in Singapore or in Hong Kong, Taiwan, South Korea, other nations, you see that the QR code is now becoming also a pervasive way of paying. And one of my favorite stories is of Tesco in South Korea. So I'll very quickly share with you a short video of what Tesco's done with QR codes and then build upon that as a bit of background.
South Korea is a unique market. Tesco has been evolving itself.
And the gist of the story is that Tesco used QR codes as a shopping media on the subway and have become the #1 electronic grocery store in South Korea as a result, and are rapidly trying to become #1 overall in Korea, although Tesco has other issues which I won't go into because they're restructuring right now. For me, this is not revolution, but it's an evolution of what we can do with phones, using the QR code. The first time I saw QR codes, again, was in Japan, when Jibun Bank, a joint venture between the Bank of Tokyo, Mitsubishi, and NTT launched, and basically offered a service that enabled, using QR codes, people to open up loans and mortgages from their phones. This is something that I now see being used in many other areas. As an example, in Britain, Barclays Bank launched Pingit, which is a mobile person-to-person payments app, which has created quite a lot of discussion because it's the first in the UK that's been launched by a bank that offers P2P mobile payments. But the big thing about this app that I loved is that when you're using it for corporates, and in particular for utility billing, for example, from electricity and gas companies, you send out all your paperwork with QR codes embedded, and these can be read by the customer quite easily. But the good news for the corporate is that the whole procure-to-pay cycle, the end-to-end process, can now be managed using one single code. That code has the customer's account details embedded, the billing details embedded, the company's payment details embedded, and so the whole thing can be tracked end-to-end by a single code, which makes the paper and electronic cycle integrated. It's an interesting usage of QR codes. The QR is just part of the evolution of payments that we're seeing today thanks to mobile, along with text message payments. because we also have this thing that's become quite a phenomenon in America called Square, which moves us into proximity payments. Square is just a dongle that you put into an Android or iPhone headphone socket. And you've probably seen these because they're used now in most economies. In fact, in Empower, iZettle, there's many others out there today. But Square was the one that, again, in America caught everyone's attention because it got the corporates to be using the apps and the services with this Square dongle. But the big news in this particular instance is that when the app is loaded on the person's phone and they regularly go into a particular store, if the store also has the app, then I can order coffee using the app. The store then says, oh, it's Brad, because I go in every day, they've got my picture on the app. This is using this payments app, Square, and they just say, yep, that's Brad, he's just had his regular coffee, add it to his account. He's paid. No wallet involved. It's a proximity payment using the GSM network and apps. Now that may not sound that revolutionary, but that is revolutionary because when I saw that mixed with a QR code, bad news for Hall E, RFID and NFC for me is dead. Because I don't need I don't need contact payments. RFID and NFC gives me a contact payment. I have to put something against a reader. It's not contactless. This is contactless. This is proximity-based payments, which is what we're going to see very soon taking over, not displacing NFC, RFID immediately, but bear in mind that those technologies are over 20 years old. This is the next evolution we'll see coming through, gradually displacing NFC, RFID over the next 5-10 years. And the good thing about Square, about proximity payments, about apps, about mobile and tablet computing, about what we're seeing with mobile, is that it makes everybody a merchant. So this is no longer a point of payment. We're not paying from the phone, it's a point of sale. So all points of sale become irrelevant. That's why NCR has launched Silver, which is a version of Square for merchants, on the basis that they can see their point of sale business is going to disappear, replaced by mobile. The challenge for the banks in particular is how to keep up with all of this and be integrated into the process. Not so much because there's so much happening, but there is so much happening. It's more to do with banks used to manage the whole process and now they don't. Banks used to manage everything through branches and through their own accounts, now they don't. It's all on the mobile. This is one of Brett's slides. Brett spoke here last year and he's a good friend of mine, but when you look at a branch visit 1 to 2 times a year versus using the mobile 20 to 30 times a month, you can rapidly see that the main interaction is on mobile, it's not physically. And for a bank, when you look at the infrastructure involved in delivering mobile services across all of this range of technologies, and I know you can't see that slide in depth, but you'll get the slides afterwards, it's an ecosystem that's very hard for a traditional player that's managed the whole end-to-end process of finance to suddenly destructure itself and reintegrate itself into this new ecosystem that involves so many players, so many different pieces of infrastructure. So why partnerships is the game that we're all into with mobile, but partnering is very hard for a bank when traditionally we haven't had to partner. We've done it ourselves. Having said that, and the reason why I said you're looking the wrong way, is that actually mobile for me is completely boring and dull. This is a dead space already, for me. Because this is something that I've been talking about since 1994. It's a technology that's been evolving and it's just taken a long time to get mainstream, as many technologies do. But particularly when you're involved in tracking future trends like I do, you see these things well before they arrive. So I saw this arriving, to be honest, about 10 years ago. I'm surprised it's taken this long to get so interesting and so pervasive. But if you're investing in a mobile strategy today, looking at that being the big ticket item for the next 5 years, 10 years, you're investing in the wrong thing. You should have been investing in that 5, 10 years ago. Today you should be investing in something else. Because that technology is important, but it's being displaced really quickly by the Internet of Things, where everything becomes wirelessly communicating with chips embedded. So effectively the mobile telephone is embedded in everything around you, because that's the functionality you will now have in fridges, in cookers, in toasters, in cars, in floors, in windows, in bricks. in everything around you, wirelessly transmitting and communicating all the time, 24/7. You can actually buy products that are around the Internet of Things right now today. I'm excited by these two in particular. The top one is a light bulb that is a normal screw-in light bulb, but it's also a Bluetooth Wi-Fi speaker. So all your light bulbs start to transmit your iPhone and iPad music around the house. You don't need to have any wired speakers. They're all wireless light bulbs. The one below is a thermometer, which is a heat temperature gauge you link into your heating system at home or your air conditioning at home. And rather than wasting all that energy whilst you're out working or putting it on a timer and then you get in late that day or you forget to turn it off, you control this using an app remotely. Or you just set it to say, keep the room temperature at 70 degrees Fahrenheit, in this case, regardless of what's happening outside. But in this room next door, make it 50 degrees because I want it cool. You can change every room to suit your app. And as I say, you control it remotely. My favorite is the Nissan Leaf, which is the new Nissan car that you control, again, using your Android or iPhone apps. So you can actually start the engine and put on the air conditioning on the car 5-10 minutes before you leave your bed or your breakfast. And when you arrive in the car, it's already set up to go. So the internet becomes involved in everything. It becomes communicating everywhere. It's using chips that are very intelligent, embedded in anything and everything. Tiny chips that you can even see on a fly here. So as you walk around, you'll get, for example, using Google Glasses, which are these new glasses that have just been launched, the idea of augmented reality. So rather than going into the store to try on the coat, you can see whether the coat suits you and whether you can afford it using your bank app. You can visualize everything, so you don't need to exchange business cards anymore, which would be interesting in our traditions. You just exchange virtual cards using a virtual acceptance. You can do that already. When you're eating, you can know exactly what you're eating and how good or bad it is for your health and how far you have to jog that evening to get over the McDonald's you had for lunch. So everything becomes augmented. And it's the reason why in Star Trek you never see anyone paying for anything. When you look at science fiction movies, do you ever see them getting out some cash or paying for something or making a contactless payment? They don't. Because the science fiction of the future, which is now very much here today, is you just walk around and you get debits and credits wirelessly circulating around you. You transact invisibly, just like how you listen to music and download music today. It's invisible. So why we have physical representation of cards, cash, wallets, I have no idea. We soon won't. And then when everything has disappeared and becomes invisible, the augmentation of service will be the key for how a bank or financial provider or card system works, because you'll be leveraging the data around the location of the customer in the proximity of where they exist at that point of time to service and transact and analyze what they're doing. No longer will you actually be doing something with any physical form. It'll be electronically deep data mining that will give you the service and the capabilities you require. When we get into that, and I guess this is the final part of what's really changing very quickly in consumer behavior, and this is a critical fact, that don't focus on the technology, focus on the consumer's behavior. It's the consumer's behavior that changes the game for the corporates and for the banks and financial and card providers that go around that process. It's not the technology devices, which is why I say the Internet of Things will change consumers' behavior. But equally, the consumer's behavior is changing regardless, thanks to gaming. Gaming is a big consumer change of behavior because it changes the way in which we think and behave 24/7. It's changed my behavior. It changed my behavior because I got into playing a game called Zombies on Facebook. And it's a long story short, but when I was playing Zombies on Facebook, the idea is that you bite your friend, and if your friend accepts your bite, you get 10 points. If they then bite their friend, then they get 10 points, I get 3 points, because it becomes a zombie scheme, a pyramid scheme. So the more points I get, the more prizes, the more important I become. So you go from being a zombie geek to a zombie nerd to a zombie priest if you get to the 6th level, and it goes up to zombie warlord at the 10th level. So it's a good game. I got into this game. I rapidly bit all my friends, and because they're in banking, they all became zombies very quickly. And I became a zombie priest at the 6th level of zombiedom. I was quite happy, but then no one else was playing the game, so I kind of got bored and I stopped playing. But then one day, one of my friends happened to also get into the game. His name was Guy Griffiths, and he started attacking me every day with shotguns. Now, to get a shotgun, you need 50 points. And I'd actually used all my points to get to being a zombie priest, and I stopped playing the game, so I had no points left. And the only way that I can get 50 points was by killing other zombies on a regular basis and fighting them in my, and I was too busy to do this, because it's just a game. I had to do some work. So I cheated, and I went in and brought some Facebook credits. At that time, it was called spare change. And I spent $25 via PayPal and Facebook credits, and who knows who was involved with Visa and MasterCard in my bank account underneath. And I got enough points to get chainsaws. And chainsaws ripped Guy Griffiths to pieces every day for a month. So I became a zombie warlord, he disappeared, I won, game over. But the point of that is that the gaming phenomena, and that's just an illustration of how it gets into your mentality, if you get into any of these games, it becomes extremely pervasive and then becomes a virtual currency. And I know that Rich is going to talk about virtual currencies in the second presentation this morning. But basically, Amazon's now launched a virtual currency, mainly for the Amazon Kindle gaming community, but it may become an Amazon coin, a true currency over time. Facebook credits, as I say, became pervasive with me. One of these games, in fact, is a good one. This is Cityville from Zynga. Again, they've lost their shine a little bit now because people get bored with these new things. But when this came out, they got 100 million players in 43 days. Because Facebook's got over 1 billion people, so 100 million people playing a game in 43 days. 5% of them are spending $5 a month on the game to buy virtual rubbish for their game. You think about the numbers, that's 5 million people spending $5 a month in 43 days. That's a $360 million business launched overnight. It's the beauty of the world we are now playing in. And then there's many, many more. In fact, you've even got American Express and other companies launching formal services around these sorts of gaming and new behavior transaction environments. And in fact, much of this came from Asia in terms of these ideas of gaming. The virtual currencies of gaming started very much intrinsically in the Asian community in the developed economies of Asia. And again, you can see these gaming currencies, these virtual currencies everywhere. Now, why is that important? It's because they become real money. To start off with, it's just virtual rubbish. But if it becomes mainstream, it becomes real value, real money. A bit like air miles is real money for those of us who collect air miles. These are real money for those who use them. Best example is the QQ currency, which you'll know the story better than me, I expect, but when this took off in the mid-2000s, it became a core transactional system that concerned the People's Republic of China immensely because of its disruptive nature, and is now monitored with Tencent, the ISP who run this currency. But the core of this is that when it was becoming threatening to the economy of China was around 2005, because suddenly it was being used for pornography and gambling, which were banned on the internet. And yet you now have a virtual currency that could be used because nothing else could be used at that time in China on the internet for money exchange. You suddenly had this gaming currency that could be used for other real services, pornography and gambling. And in fact, pornography, gambling and gaming go hand in hand in how we change our behaviors and how we change the way we think about money. And gaming starts that process. Gaming leads into pornography, gambling and other stuff. It's a bit like why Bitcoin is becoming so interesting. And again, you've probably heard of Bitcoin, particularly in the last few weeks, because it went up to $266 a coin, having been valued around $20 a coin for the past year, because suddenly a lot of money was going into Bitcoin. You may think this is going to disappear. It's not. The reason why Bitcoin is very important, again, is because it's the first encrypted currency that's trusted by the internet community. Like WikiLeaks, this is the wiki coin for the anonymous generation. This is a global currency that has no central bank involved, that if it does become a truly accepted global currency like gold and silver, then of course it's going to be changing our world, just as the internet has changed our world, just as mobile has changed our world. If everybody globally can transact wirelessly through mobile internet technologies with no central bank or system involved, and no exchange currency overhead involved, because this does not involve overhead, then you have a new form of commerce. And that's what Bitcoin is trying to create. The reason why it fluctuates so much in price is that there's only about $1 billion in the total Bitcoin world right now of value, in terms of real US dollar value. It's about $1 billion. So if someone puts in $100 million to that system, of course, the price goes through the roof. If they take out $100 million, of course, the price goes through the floor. But imagine when this economy has $100 billion or $1 trillion. It may or may not happen, because Bitcoin still has some issues to sort out. But if it's not Bitcoin, it'll be something else. A little bit like if it's not Facebook, it'll be something else. If it's not Twitter, it'll be something else. These things evolve. But this is the first real evolution of a new form of value exchange that sits completely outside the banking and financial system. And I'm taking it very seriously for that reason, because I reckon that very soon I'll be buying my airline tickets using Facebook credits, tweets, and Bitcoins. Or if not those, something very similar. We shall see. So that's the reason why I think we're looking the wrong way, because we're all focusing on these mobile technologies and devices and iPads and apps and tablet computing and thinking how cool and trendy and interesting. And it's not. These are really transient, short-term things that are a reflection of the way in which our lives are intertwining commerce and community, socializing and business, work and life. These are not separated anymore. If you think they're separated, how many of you actually look at your social network and your email before going to bed on your iPhone or on your Android, or use your Android or iPhone or whatever phone you have as your alarm clock? What's the first thing you look at in the morning and the last thing you look at night? Is it your partner or your mobile? I won't try and ask you to raise hands on that one. But the reason why mobile as a technology has changed us is because we've integrated our work and life. We've integrated our business and our community. Social and commerce are now one. They were separate, they're not separate today. And that's why the bottom line for me is that if I'm a card processor, payments provider, financial institution, I've got to look at the data and leverage the data. That's the only thing I have in my armor that I can use to win the battle for consumer relationship, for consumer mindshare. I can't battle on devices, technologies, structures, processes, because to a large extent, those are going to be an ecosystem I have to be a part of. What I can leverage is the data. Now, we all know who's leveraging data today. It's Google, Amazon, Facebook, and Apple. And that's the reason why so many shops are disappearing off the high street, the main street. The electronics retailers, the bookshops, the camera shops, they're all disappearing. They've now gone into this internet world. That's exactly what we're seeing thanks to Bitcoin, Amazon coins, mobile, with banks. And I'm not going to agree with Brett, who I did say spoke last year and said that branches will disappear. The branch has a role in financial distribution, sales and service. It's just a very different role to the one it used to have, and much less important in the infrastructure of things and the Internet of Things that we live in today. So that's my opening. I trust that gave you some insights. As I say, thefinancer.com is where you'll find out a lot more about what I'm thinking. And all the case studies and things I refer to are on there. And I trust you enjoy Cards and Payments, the 18th conference in 2013. Thank you.